It's great to have your company for the weekly this Friday, the 27th day of August. My name's Jessica Amir, a senior market analyst with Bell Direct. Well, it's been another pivotal week for markets. We saw a spike in New South Wales COVID cases, further lockdowns, and weaker than expected economic data, i.e. construction data that came out, starting to affect broad Aussie share market sentiment. While more broadly, global markets are awaiting the US central bank, the Fed, slowly ripping off the fiscal stimulus band-aid when they meet next month. So this will take away the post-pandemic punch bowl that's been so crucial in pumping up global markets and equities. And this is expected to cause a big change in markets. Some forecasters are expecting a 10 to 20% fall in global equities. And now the warning bells are here for Aussie equities. Last week, our market fell 2.2%, the biggest pullback since January. This week, Monday to Thursday, the market only rose 0.4%. But another technical trigger was flagged. The shorter term average of the market crossed the longer term. Remember, we saw that last week and the market then fell 2.2%, right? So this week's bearish signal means we'll probably see investors reduce holdings and leverage or borrowing against stocks. Although we may see another pullback, the good news is the longer term uptrend remains in place. So investors will be awaiting a dip to buy stocks that they like at cheaper prices. The longer term uptrends remain intact because the market is focused on the economy reopening, as the government is saying that our borders will reopen in December if 80% of our adult population is vaccinated. Currently, about 30% of us are fully vaccinated. Now, Qantas also backed the government's plan and says they'll resume flights to the US, parts of the UK and Asia by Christmas. So in terms of the big key themes taking place across the week, we saw investors take a forward-looking approach, excited about the economy reopening for Christmas. So investors were buying into growth sectors like tech, energy, mining, real estate and financials, while investors sold out of defensive sectors, reducing holdings in consumer staples, utilities and telcos. If you have a look at the top 200 stocks, growth names did well as stocks tied to Australia reopening its borders. So we saw software logistics giant WiseTech, WTC, their shares rose 30% to an all-time record high, $46.68, after reporting stronger than expected financial results and strong guidance for this financial year after they signed up FedEx as a client, which will strongly drive growth over the next few years. Morgan Stanley backed up this thinking and stamped WTC as a buy, expecting demand for WiseTech's software platform to grow as they've taken on the world's largest global freight company. Meanwhile, travel companies like Flight Centre shares flew up 23%, Qantas QAN up 18%, corporate travel management CTD up 11% on restrictions easing because vaccination numbers are surging. Now to the All Ords, the biggest 500 stocks. Well, the owner of Dreamworld and US-based Main Event Entertainment, Ardent Leisure, ALG, their shares were a standout, up 24%. to $1.35. That's their highest level since February 2020. So why the strong rally all of a sudden for Ardent Leisure, ALG? They reported stronger than expected earnings numbers for the 2021 financial year, boosted by Americans heading back to indoor bowling and playing arcade games. Main Event makes up 90% of Ardent's business, and that division reported a 53% jump in earnings, or EBITDA. And demand for entertainment is likely to continue to grow and continue to boost earnings. As such, JP Morgan upgraded ALG stock to a buy. Moving to what to watch ahead. Well, firstly, it's the last week of reporting season next week. So it's important to recall where we're at now. So far this earnings season, 224 companies reported results. 80% have met or exceeded estimates. Remember, if a company's results meet or beat expectations and they guide for a stronger future, their shares generally rally over the next 4 months. If they miss expectations or deliver sour grapes, their shares generally fall. Now, remember, this is based on historical data from the past 11 reporting season. seasons rather. With that in mind, we know next week on Monday, Fortescue Metals FMG is likely to report a record result, a profit of $10.3 billion in US currency. However, future growth is expected to be dim. Why? Well, the iron ore price is down 20% from its high and steel demand remains restricted by China. Orocobre, ORE, reports on the same day. This is Australia's biggest lithium company, and it's mining and selling the metal of the future, which is used in electronics and electric cars. Now, ORE recently merged with Galaxy GXY, and they've created the 5th biggest lithium company, so its outlook will be closely watched. Check out Bell Potter's reporting season calendar with consensus or market expectations, and also stay tuned to Bell Direct's Morning Bell and reporting season updates, because we'll share what you need to know. Lastly, as for economic news to watch next week, there's lots of data out, but all eyes will be on Wednesday's release of economic growth. We'll get a readout on GDP for the second quarter. Now, Citi is expecting the economy to fall to a slower growth rate of 0.4%. Now, we'll keep you abreast of what you need to know closer to the date. And that's the weekly with lots to consider. If you've got any questions or feedback, please leave your questions or comments in the comment section on YouTube. From all of us here at Bell Direct, please have a happy and safe weekend. I'm Jessica Amir. Bye for now.